Hey guys, Mike here. So, oh boy, what another red day today, and it was definitely very volatile for sure. And in this one, obviously, the one thing I always say, the more informed you are, the easier it is to be calm in a storm, right? And so, again, since I have to put a morning news brief together every morning, I see what's happening as far as the flowing in, flowing out, fear and greed, all this crazy mess, right? The breadth of the market, all that stuff. And so we'll get into that here quickly. I'm also going to show you a chart that's probably one of the scariest charts that if it were to actually play out, the bears, the ones that those people out there who really want like the banking system and everything to collapse. I'm talking about in America, and I'm talking about Americans, by the way, not people from other countries. There are actually, I think it's a big group, probably 20% of Americans at this point in time, that really want the whole thing just to come, the whole house cards just to drop, right? Which would be just horrific on so many levels. It's just insane. But the reason why I know that is because I'm in the YouTube world, and honestly, if you don't believe me, there's a couple channels you can go to. Just email me, I'll tell you what they are. And I'm telling you, if you look at their thumbnails, that's all they have is flames and the banks burning down. And these creators are just laughing all the way to the bank, right? They're making, hundreds of thousands of dollars creating those videos, and they get a lot of views. That lets you know, it's like, ooh, that kind of where we're at as a society. And I know YouTube's global, so they're getting other views, but I guarantee you, I look at analytics, it's most of people are in America, which is crazy when you think about it. But they would love this chart if they were watching. They'd be like, oh, that'll be fantastic. Like they'll have a smile on their face looking at that. And I have a look at it and I feel like a terror unless you're just all in cash, right? And then we'll look at something that's happening to all the Magnificent Seven and something that happened to the S&P, which is very important. You'll definitely want to watch this right here. But honestly, I don't know about you today, but I feel like this little kid right here, I don't know if this is real or not, but I swear he's trying to hold on for dear life in a car, right? Because it was super volatile. It was swinging everywhere, right? But mostly down. Now, this morning we had a boatload of economic news come out, and you can see GDP came in hot, 4.9 on a 4.3 estimate, buddy. Now, a lot of that was government spending, yes. And so let's just keep that, in mind. Core PCE prices 2.4 versus 2.5. GDP price index 3.5 versus 2.5. Real consumer spending came in what they thought it was going to be, and so did continuous jobless claims. Now, which everything took a backseat to GDP. But when you look where we're at now, you have both fear and greed indexes as of the end of the day in extreme fear. The one I like the most, which shows what percentage of stocks are in a upward trending channel, is only 20%. But the CNN one did drop to extreme fear today as well. And then when you look at the 200 moving average, how many stocks are above the 200 moving average? Look at it. It's gone down from the last time I spoke to you about it, right? And it's just not many at all. And then when you look at the 50-day moving average, which obviously, this will give us more of a short-term type deal. When we look at this, this is abysmal. 8% of tech, 8% of consumer discretionary. Communication service, 27%. Financials, 24%. Energy still up there at 39%, right? Industrials 14%, 3% materials, 20% utilities, 13% consumer staples, 0% REITs. I wonder why. 19% healthcare and 19% on the Nasdaq 100, that's what's been holding up the whole market, right? Now, this chart I was telling you about before we get into the big stuff on the charts and everything. This right here is the blue line is U.S. total net worth, which basically is the balance sheet of households and nonprofit organizations as percentage of change, right? And then the one below is U.S. GDP percent change. And you can see this got labeled out, the dot-com bubble, as you can see down there, and then the housing bubble. So this line, pulls away from the GDP line, of course, but when a recession hits, it gets a lot closer, right? They never really touch. But then just look to the right where they call this the central bankers bubble, which is basically what it is, right? And look at the gap now. It's crazy. Now, I was even doing a members video today showing them how used to, if you took the 200-day moving average, went to the weekly chart, and then uploaded also the 200 weekly moving average, they used to intersect each other and actually cross, right? The 200-day would cross the 200 weekly moving average and show you a sell signal, and then the market would crash. They haven't touched since 2009, since the Fed took this over, not even close to be touching. And so, that's how crazy this is, or what they've done, especially when it comes to tech and everything. But even if this, let's say play out next year when we have a recession, even this come down halfway, that is just would be just a massive drop, right? And that's why I say the people who really want the whole house cards come tumbling down and everything because they don't understand the repercussions of all that, they would love this chart. I would look at this and say, wow, if this played out, it would be absolutely horrifying for so many people. And the only thing people I can think of are retired people. Like, they would be totally up the creek because they can't go back out and work, right? We still got time to get back from it, but they don't. And so that, or the people just starting to retire. Oh, that'd be even worse. But anyway, let me know in the comments on that one. Now, looking at the S&P right here, and before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support. You can see, where did it stop at today? Where did all the bleeding stop? Right there on this volume profile node, right there, the year to date, the 2023 one. And that's why I say, pull this thing up. It works. Where did it end up getting rejected? Up here at, right there. So it'll show you can really draw out some support and resistance lines by using this. Just type in VRVP, I believe it is, on TradeView if you need to count. Links down the bottom. Now, I always told you, nothing good happens below the 200. Where are we at? On the weekly and daily, we're below the 200, right? Usually you're going to wait to see if we get above it or get a retest or something. Now, these trend lines right here, you can see this is more of a shorter term one. From the 2020 low, you can see we got multiple bounces. From the 2022 crash bounce, the March crash bounce, or March pullback bounce. And of course, we're sitting on it now. So we get to see if we get a bounce or not. Now, the other one goes all the way back to 2009. As you can see, it was support, turned into resistance, turned back into support, and it just fell through that last week. So now we get to see if we get a bounce with the shorter term trend line, which we bounced off multiple times, and get above, or is that line going to turn out to be resistance? That is one big question to ask ourselves. Now, looking at the Nasdaq, and this is the Nasdaq 100 because that's what's carried the market, right? Because 45% of it is the Magnificent Seven. Of course, now they're all down hugely. I'm not what sure the percentage is, but obviously we broke out of that falling wedge. So I'll take the top line away. I'll keep the bottom line because that will be resistance now. This weekly fair value gap, I talked to you guys about this multiple times. One of them, at either the top or bottom, was going to be the magnet. Ended up for the liquidity grab going to the bottom. We have mitigated about 50% of it, a little bit more than 50% actually. And you can see the 200 is right below it, okay? As I pull up the Nasdaq composite, though, that is actually different because this has a lot more stocks in it. You can see it's falling below its 200 moving average. So now every index, major index, the Dow, the S&P, IWM, Nasdaq Composite Index, they're all down below the 200 moving average. Just the Nasdaq 100 that is still up. And the question is the market going for that 200 moving average? Is it trying to complete that weekly fair value gap? Or is it satisfied with what it's got so far? We were down below the 50% retracement from this last move up. Again, if you want to go all the way down to the beginning of 2023 where it really started to rocket, we still got some ways to go. So that's really the big question with all the X factors like I talked about in the beginning of the video. But, we'll have to see what happens here. I definitely wouldn't be a hero and try to jump in front of anything here. Now, remember, the market goes as Apple goes. What happened today? Apple finally showed weakness, broke its 200. When it broke the 200, the market really turned down, and so did Apple, right? And actually sold down pretty nicely. And so, and you can look at this one. I mean, obviously, if we scroll out here, we're going to go ahead and pull up our volume profile. Like I said, VRVP. And you can see, I mean, that's what saved it, right? It ended up bouncing on that right there. I mean, you can see the MACD down below. I mean, again, this is one of those ones that's in that falling wedge, which technically, as long as it stays in there, is a bullish structure to the upside. They do report earnings next week. Maybe that's the case. So we still got that line down there we have not broken through like the Nasdaq did. But again, that line is pretty much the line in the sand because if it ends up going through that, it's going to be a nice little drop, and maybe earnings is what does it. That's what I'm saying. We just don't know with Apple out there reporting and stuff. Again, the most highly held stock in every pension fund, retirement fund there is. Keep that in mind. Now, Google here basically fell down, hit another tree branch, and you can see that's what held it up. Again, the volume node hold it up right there. This gap, this fill part of it, so I'll fix that where, okay, when it dropped down 10%, it filled a little bit of it. Then it gapped down again this morning. So that's two gaps in a row. Again, let me put a big old gap right here. So we still got two gaps down below. So if it loses this volume node, it's going to go down to around probably like 117. If it breaks that, you're going down around, looks like 114. And we won't even talk below that because that puts the 200 moving average in play. And you'll notice on most of these big ones, they've lost the 200. A couple of them have not. Now, Amazon just reported it's doing the same thing Meta did. popped on earnings, went up here, missed its cloud revenue, and now it's selling off. So we'll see where it opens at tomorrow. The 200s right here. MACD looks horrible, below the zero line. No momentum right now. We scroll back though. This is the trend line. Started when it started its move up in late December. So if it hits down here, this will be the third bounce. We'll see if the 200 and that trend line and this volume node over here will hold it up come tomorrow. Meta, of course, sold off even more today when it opened up. So we'll see where Amazon with a 95 PE will open up at tomorrow. So just keep that in mind right there with that one. Now, Tesla. Tesla has lost its 200 again. It got back above it. Now it is down the daily. Fell below this volume node, and now it's in this volume gap. MACD looks absolutely kind of bad there, to be honest with you. Now, this one, again, in this volume gap, anywhere from like, I don't know, 200, 212, somewhere in there, again, is the battleground. So until you lose 200, you're looking at like 185, I believe we talked about weeks ago. And, but when you look at this, the bears are still in charge, okay? Because why? You've set lower lows, right, and lower highs. Now, we are oversold. You're going to see this in a lot of these. This is the daily. It is oversold, but it's in a downtrend. Doesn't mean it's going to bounce. Doesn't mean it has to bounce. I've showed you that before. And so we just have to wait and see if the dip buyers are going to continue to come in. But you can see that is lower lows. These are lower highs. It's in this downward channel, okay? And so until it breaks down from that and we start to see even more negativity, we'll see. But again, 202, 212, somewhere in there. Now, Meta, like I said, gapped down, gapped up big yesterday and then totally sold off and then gapped down this morning and kept selling off. It's in this volume gap right here. 200 is pretty far below. You remember when 200 wasn't that far below? And now it is. That 200 has come up. I told you it's a rubber band, okay? MACD rolled over. It's above the zero line, though, so it looks better than a lot of these other stocks, okay? Now, NVIDIA, head and shoulders back in play right here as this one continues to sell down. It would be sweet to have that gap down below. But the only way that's going to happen if they crap the bed on earnings, which is coming up, I don't know if it's November 8th or 18th, but it's somewhere in a few weeks. Again, this is another one. The 200 moving average is a mile away. It ain't no more. All right, and again, there's really no support down there for it. So if it does drop, then yeah, it's heading down for sure. And I would think there would be a whole lot of buyers at the bottom of that gap. But again, this is NVIDIA. Every time we think it's going to die, it ends up popping again. So I won't count this one out just because big money's been holding this thing up like crazy. Now AMD, of course, if NVIDIA is selling down, you almost guarantee AMD is selling down. It's another one that's lost a 200. And so remember, it bounced off it before. It was support. Now it is not. So it's the first time in quite a while it's lost its 200. Now it's back down this falling wedge right here. So that top trend line will be resistance now. The MACD is below the zero line. Again, it lost that volume node to the right over there. So if this one did go down to around 89, 90 bucks, wouldn't surprise me. That would be the bottom of the channel and where that next volume node for support actually is. And then we got earnings tomorrow. Nothing big. I mean, you got oil stocks. I mean, we assume they're going to say they're not trying to pump any more oil out, and they made boatloads of money. You have Charter, AbbVie reporting as well. And then when it comes to economic news, we do have quite a bit. We got core PCE, PCE price index month over month, year over year, personal income month over month, personal spending month over month, a couple Fed speakers, and then you'll have Michigan consumer sentiment, which I don't really care about. But like I always say, and I think I've been right so far, with the market tanking, it will be down. So I care less about that. But the economic data absolutely, before the morning bell could move markets one way or the other. We'll have weekly option expiration as well. So keep that in mind. And again, we're still, how many days is it? 7 days straight for the S&P it's sold off, I think, or something like that. So a boatload of red days. So if we get some crazy, move tomorrow up, don't be surprised just because you've seen it. How many times now? It's October. It's going to be volatile. Just expect what you can expect, even though Amazon's selling off right now. And as long as Meta's showing weakness, Microsoft looks terrible, and then Apple's showing weakness. If those, it's 4 of them, just 4 of the 7 are showing weakness, especially those 4 because they have such a big weight, then the market is going to be weighed down. I don't know if you noticed today, but the RSP, which is the equal weighted S&P, was actually green, while the SPY was down a full 1%. So it was a huge difference. I just put a members video out and showed them all kinds of stuff on that. And so that was a big difference. So that meant money was doing what? It was moving somewhere, right? So just kind of keep that in mind when you're looking at stuff like that. So anyway, hope you guys got something out of it. I'm trying my best. Please hit the like and subscribe button. If you did, please share the video and everything. And I will see you tomorrow. Have a good night.